Hello everyone, welcome back. So yesterday I also attended Berkshire Hathaway's 2021 shareholder meeting, and I think I gained a lot. So today I want to share some of the takeaways. So from Warren Buffett's presentation, he briefly first talked about the company's overall operation situations. Like last year, the operating income has increased around 19% to $7 billion. And Warren Buffett thinks operating income is more important than net income because they have some unrealized capital loss for some of the investment, but since they are long-term investments, so that will not affect the overall balance sheet in the long term. So he suggests like looking at the operating income is more important. So comparing with the operating income number in 2019, which is before the pandemic, the number has increased more than 26%. So that we can see overall company's profitability has been growing and hasn't been affected by the pandemic. So as for the performance of BRKA and BRKB, BRKA has grown 52% comparing with the stock price of last March, and BRKB has grown 47%. As for 2020's performance, like in the past 4 months, the stock BRKA has increased 19%, comparing with S&P 500 11%. That is more than the index fund. For their company performance, my takeaway is that although the current stock price may be not the cheapest one, comparing with the stock price last year, but the stock is still a good one for its very stable, continuous profitability and low risk. So other than knowing that Berkshire is a good stock to invest in, there's something more that I learned from this. The first one is that the change of the global economy by giving the top 20 companies considering the market cap, and he compared with the situation in 2021 compared with 30 years ago in 1989. So the findings is very interesting because in 2021, out of the top 6 companies, there's 5 from the US, showing that the US market is a good investment environment comparing with other stock market. And it's also interesting finding that comparing with the situation 30 years ago, the top 20 list, there's no one company is the same. So my takeaway is that although I'm very interested into picking the stocks and hold it for a long time, but it's very hard for us as individual investors to pick a stock that would be in the top 20 companies around the world for a period of time. So one good solution would be probably invest in the index fund like VOO or SPY. The rationale is to betting on the growing US economy and the booming capital markets rather than betting on specific companies, which is very hard for us individual investors. Another question that the investors asked during the meeting, I find is very interesting, is about his operation with the Airline Stocks. We know that last year at the beginning of the year, he bought the big 4 airline companies, but later on, after the pandemic, he sold all of his positions with a small loss. After a year, the airline stocks has grown back, so a lot of people, they don't understand why Warren Buffett wanna sell those airline stocks at the early stage, because he has a very famous saying that when people are fear, he will be greedy, and when people greedy, he will be very fearful. Warren Buffett's answer is that for those industries which is revenue is below 100 billion, he thinks they have suffered a big loss during pandemic, and because the international travel hasn't been resumed because some policy of the country and the still going on situation of the pandemic, there's a lot of uncertainty of their profitabilities, and there's also the probability of their lose potentials. So because Warren Buffett don't want to invest in something they have a higher risk, and I think the risk is what beginner investor doesn't consider a lot. But for Warren Buffett, as he takes care of a huge amount of money of his investors' money, he thinks he cannot risk other people's money. So that's why he didn't invest in the airline stock, except American Express. And he also explained that the airline stock price has increased and recovered. It's not because their profitability has returned to normal, but because of the government bailout. And he thinks that he sold the stock, it is probably better for those companies and those stocks because the government will do what they can to help them. And another question I find interesting is about the tax. So some of the investors are worried about the raising tax by the current administration to the 43% for the rich people. And for Warren Buffett, he doesn't worry about it at all for himself or for his company because he thinks that is what it is, it's given. And the companies will gradually adapt to that. For his own wealth, he will give out 97% of it to the charity or to the federal government. So he thinks there's not much big difference for how much tax he will get. Some people may considering that whether in current environment a dividend will be a good investment, because if the tax rate increased to 43% for the rich people, a lot of big investors, they may want to move to the dividend stocks because the dividend income will need to pay less tax. He thinks this will not affect Berkshire's investors. Berkshire's investors, they want the capital gain versus the dividend income. So that's what they have chosen. If these investors they want a big dividend, they can choose something like Coca-Cola stock, which pays a higher dividend. So I think these potential higher tax policies would be bullish to those high dividend stocks. And for myself, I also planning to allocating more into the higher dividend stock like the telecommunication companies AT&T and Verizon, as well as some rates companies like SPG and O. And another interesting question is why Berkshire has hold huge amount of cash position right now. And so their current cash position is more than $140 billion, which accounts for 15% of their total asset positions. So the answer from Warren and Charlie is that because in this current situation, the stock market is very volatile, and so is the economic situation. The situation has changed rapidly since last March. So as a big company, they need to make sure that they have enough cash in any circumstances, and they don't want to depending on borrowed money from the government or from other banks. Like some companies suffer from not enough cash flow. So that's why they don't want to make a huge acquisition in this type of environment, although they have saying that they want to make a elephant size acquisition with the cash available at hand, but they wouldn't do so in the current risky environment. But Warren Buffett do mention that they would probably keep their cash position around 10%, and from now on their cash position will be lower. So although they didn't do a very large amount of acquisition, but we know that since last year they did some stocks buyback of their own companies, and that also leads to a higher position of the Berkshire stocks. So in this quarter, they had buy back 6.6 billion Berkshire stocks, and in last year, in total, they buy back around $24 billion. So as for the reason of those stock buyback, They mentioned they want to provide the best return on capital to their investors. So if some investors want to exit, they want to buy back those stocks. And for the current shareholders, current stock they're holding has higher stock price. So they would also have an unrealized higher capital gain if they want to keep holding the stock. And Warren also mentioned that different companies buy back for different reasons. If the company buy back just to push the stock's price higher, then it's immoral decisions. May not be a good decision in terms of capital allocation. But if they want to buy back stocks for the interest of the current shareholders, that would be a moral decisions. So I think it's very interesting that buying back the company's own stock, they may be like the same action, but they actually have different reasons and have different effect to the company. And another interesting questions I find is about ESG investing, because in the most recent quarter, Berkshire has bought a large size of Chevron stock, and Chevron has been considered a traditional oil and energy companies. Many people may consider it's not environmentally friendly, and in the shareholder meeting they also clarify that the company is also in the transition phase, that they want to transfer their business from the traditional oil energy to the new cleaner energy, and they are aiming for the reduced carbon emission by 2030. For those investors interested in ESG investing, that is also very interesting to know. So there's another interesting question that Becky picked, is that in the past year there's some high flyers, like other than Apple and Google, some stocks have their all-time highs and the stock price has increased 10 times, 20 times, 30 times. Not considering GME, but some big tech stocks. So Warren answered it from the macroeconomic perspective, because the Fed has controlled the rate at 0 and they're not considering go to negative interest rate, but they would like to continue the interest rate for a while, and probably there would be some kind of inflation, but QE is a very important step for the Fed to help the economy. So Warren Buffett also think that because of the 0 interest rate, that leads to the higher valuation of a lot of stocks. But this situation may not continue if we are looking at a longer time frame. And in my opinion, that's also very true. For last year, a lot of stock has increased 10 times. But if the investors are considering the stocks to increase 10 times this year or next year or the next 5 years, that can be very hard. And for a lot of beginner investors who is not professional in these categories, like Warren Buffett, knowing the stock and knowing the company very well and considering the potential risk before the investment is very important. Like the stock can increase 10 times, but it can also decrease a lot as well. And I feel like if we want to live a happy life, we need to get prepared mentally of the worst scenario that may come. I think Warren Buffett and Charlie Munger not only very success in their financial life, but also success in their own lives. Like they all have a very longevity and they look good in the shareholder meeting. And I think for us individual investors, return on investment is one thing, but mentally health is another thing. I feel like when I investing in some high risk stock, I would be very stressful mentally, and it may not be good if the situation is going on for a long time. So controlling the risk would be beneficial for both financially and mentally. Yeah, that's all the takeaways I have from the Berkshire Hathaway meeting. And I also want to keep sharing the takeaways with you guys. So thank you guys for watching, and I will see you in my next video. Bye.